Good morning, market movers for Tuesday, December 10th, 2013. A kind of a quiet day, opened down a little bit. Dow futures pointing to about a 50-point drop. We're not down nearly that much, maybe 10, 12 points right now. So things are not quite as negative as they were going into the open, at least according to what the futures were indicating. We had three different Fed governors come out yesterday, all stating that tapering is on the table for the December 17th and 18th Fed meeting, which is coming up obviously in just a week. Not a whole lot of other economic data to look at today, but the market is down a little bit across the board. NASDAQ down a few points, S&P down about 3 points. That's after hitting another new high yesterday, 1808 on the S&P yesterday. So quite a bit of positive action in the market. We are very close to the end of the year. I don't expect to see a lot of tax loss selling simply because there isn't a whole lot of tax loss sitting in people's accounts right now. The market's up 26-27% for the year if you look at the S&P. So pretty much anyone who's been investing this year is for the most part going to have gains, not losses. So normally we have tax loss selling at the end of the year in December, and then we have the January effect where things bounce back in January. But without a lot of tax loss selling, there's really no reason for the market to get hit a lot in December, at least from that perspective, and there's no reason to expect that we're going to get a big bounce in January if we don't get a sell-off in December. So a little bit of a different picture this year. There could be other things, obviously, that affect the market and knock it down before the end of the year, but now with only a few weeks left, a lot of people are going to be out of town. Unless something major happens, we're probably not going to see a lot of downside in the market. We do have the Volcker rule, that vote's happening today. It's simply a rule that states that banks can't take undue risk. There are a lot of different ins and outs for this rule. Basically, they're asking for a lot more specificity with regard to what bank decisions are when they look at doing things like derivatives, for example, which caused the majority of the mortgage market meltdown and all the other things that happened, irrespective of the fact that we were in a pretty big bubble for real estate and the stock market at that time anyway, so and at an economic peak. So we'll see what the outcome is from the Volcker rule, but short of some major announcement from the Fed saying they're going to start tapering when they meet next time, which is again only a week away, we shouldn't see a whole lot of downside or a whole lot of activity in the market between now and year end, just because it should be pretty quiet. Lots of people will be out of town, vacationing and that sort of thing. So we'll see how things progress, but so far so good. Fairly quiet after another record high yesterday.